The markets have had some big up days, down days, up days, down days here over the last 4 or 5 trading days. This is a sign of indecision between the bulls and the bears. This is the same indecision that's occurring over a 3 or 4 day period as what occurs on a 1 day signal, such as a doji or an inverted hammer. We saw the same scenario over here in early August, where after an extended downtrend, we started to get some big, huge, wild oscillations which stopped the downtrend. So the Japanese rice traders through the centuries have been able to identify the symptoms of a market that tells you when a change is about ready to occur. It also has a little bit more added benefit to it when it's right here at a resisting level, or resistance level, as we can see. Now, the one bullish criteria today was that the markets came down, or the Dow came down, touched the 200, and bounced back up and closed right at the T-line. So it hasn't yet closed below the T-line, but it is starting to show some weakness. However, this could all change the scenario if they open up positive and take it right back up again. That oscillation means there's going to be a dramatic change in the market trend. That dramatic change could either be bearish or bullish. And understanding the forces that create signals, such as a fry pan bottom, signals and patterns, is giving the investor the advantage by knowing that there's an inherent force being built up in a pattern despite which way the market is going. We recommended BRLI this morning on positive trading because of a fry pan bottom breakout with logical targets. First, the 50-day moving average, which would also fill this gap. The reason for pointing this out is that even when the market is weak, the overriding pressure is still oriented toward that specific pattern of in a stock or an individual stock, with much less relevance to which way the market is moving. Being able to identify patterns, such as a wave 1, wave 2, strong wave 3, starting off with a derivative kicker signal, which is a kicker signal that has a doji in the middle, still a very powerful bullish signal, and a wave that's coming right back to the T-line. One of the things that you will notice in candlestick analysis is that even on big down days, the probabilities of a good percentage of the portfolio will have either decent days or decent bullish days, or not as weak pullback in stocks or positions as stocks that weren't being recommended based upon the strength building up in their patterns. That'll be it. We'll see you in the chat rooms.